Good morning, ladies and gentlemen. It is September 18th, 2023, 8:46 a.m. It is the second to last week of September, and we are here on a Monday morning once again for the market open. I am incredibly excited to get to the market open today. I had a pretty interesting weekend. I would love to know everyone in the chat and the weekend they had and anything they did. I ended up going to, and some people who follow me on Twitter probably saw this last night. I was tweeting about it. I ended up going to a very rich person's house. It was a family friend of ours, and this guy is a real estate mogul. He came from India when he was 18 years old, no high school education, became a mechanic, and decided to just start working. And his story was just inspiring. Like, people would close their shops on Sundays, he kept it open on Sunday. People, usually mechanics stop working at 5 p.m. He would stay open until 10 p.m. Just grinded and ended up making a lot of money and buying a ton of real estate. And there was a lot of fun discussions we had. So it was a really good weekend, just getting to know a little bit more about people and how they built their wealth. And it gave me some more inspiration just in terms of working a little bit harder. And I have something funny to say about how they thought about the stock market. So we'll get to that in a second. Joseph Villegas, Ray, Thomas, Hakoon, Ty Gordon, Kane Frost, Morris, Pete, Damian, Torben, Justin Bryant. I was 1 minute late, so Gator says Amit is still in the shower. Why is Amit not here? SJ, David, thank you all for being here. Marvin, Astricus, Sam Chan, Della Rose, Eamon, Miami, Ren, Tony G, Hawk Sung, Della Rose, thank you all for being here this morning. David says, finally remember we start earlier now. Yes, we do. We start earlier. We have 123 people here in 1 minute and 47 seconds. I cannot express how grateful I am. Two things I want to say, and then we're going to get into all the news. Number one is, so first is the more serious part, then the more fun part. The reason that person that I visited yesterday is so wealthy, the reason they've done so well, they have like a $2 million house here in New Jersey. I mean, we stepped into their house and it was just insane. They have a lot of gratitude. This is the one thing my mom has told me my entire life. You have to have gratitude. He lives with his grandparent. He lives with his mom and dad, his wife's mom and dad, his brother's kids, and his brother's wife. They all live in one house. So very, most Americans don't live like that. They're Indian, they're Sikh, so they have a little bit more of that familial values. But 13 people living in one house is kind of insane. And there's no arguing, there's no bitter discussions, there's no back and forth. It's like they all love each other. And you can feel as soon as you step into their house how much love there is. They brought so much food out for us. I think one of the key elements to wealth is really just being so grateful for what you have. And it's one of the things that my mom has put deeply into my mind since I was little. And so when I say I'm grateful for 177 people being here, I mean it from the bottom of my heart. I am grateful beyond measure that I have a chance to do this every morning, that people actually want to care and listen and give their thoughts. Like it's a lot of gratitude coming from me. And I know that gratitude is important to being able to build anything. So thank you all for being here. Now, the fun part about all of this was I asked him, he has I would argue probably $20-30 million in real estate. He didn't give me the exact number, but the way he was talking about it's a lot of money. He's talking about flipping houses like it's nothing. I said, so how much money do you have in the stock market? And he started laughing. He was like, oh yeah, the stock market. I think my wife lost 350 grand in the stock market during COVID. And I'm there like, and his wife's there sitting like, oh yeah, the stock. Yeah, I invested in some stock. I lost 350, but hopefully it'll come back. I didn't sell the stock yet. It was some biotech stocks that have done 17 reverse splits, so the money's not coming back. But when they casually talked about losing 350,000, oh my goodness! That shit was just. And the husband, he's so nice, right? He was laughing about how his wife lost 350 grand because to him, 350 grand is pennies, literal pennies. So he's like, oh yeah, we lost 350 in that. He didn't even say 350 grand. He's like, oh yeah, we lost 350. And I'm just sitting there 350, 350 is not a small amount of money. So, they're just laughing about it. And really what it changed my perspective was when you're making real money, 350 grand in the stock market, losing it. It's nothing, right? Because it's just 350 grand. So it was a really interesting weekend to get more context on wealth, how to accumulate wealth, how to think about wealth in a different way, how to be grateful for the wealth that you have, and ultimately how to, build something going into the future. All right, let's get into the market open. Here we go. We got a lot of stuff to talk about. I think we'll talk about the breaking news that we got as we get into really what the headlines were this morning. Tesla is opening up or is in talks to open up a factory in Saudi Arabia. So I want to start analyzing what's going on there. And then we'll get into some of the macro stuff. Obviously, bonds are up. And last night there was a technical error in computers in terms of how high bonds went up. And a lot of people thought, are we into a credit event? What's going on? But here we go. Saudi Arabia is in talks with Tesla to potentially open up its EV factory there. The kingdom is trying to boost foreign investment, but has contentious history with Elon Musk. Now, the reason this is interesting is for a couple of reasons. Number one is Elon Musk met with the Turkish president / prime minister yesterday. I'll see if I can get that picture for you guys. He was actually holding his son. I think his son's name is X, and that was really nice to see. But they are negotiating a potential factory in Turkey. Now, why is this interesting? Well, Elon has had to basically bow down to Turkey in regards to Twitter. Turkey is not a democracy in the same way we would think of a democracy. And as a result of that, Turkey has forced Twitter to take down posts and all this type of stuff. And at the end of the day, as much as Elon wants free speech, he doesn't want the platform to leave the country, and he has had to comply with certain things in order for the platform to stay in the country. So it's really interesting. I wonder if he at all used Twitter as negotiations of like, I will bring all these jobs and wealth and, prosperity to Turkey via Tesla if you guys loosen up your restrictions on free speech. I think his advisors probably told him to not do that, because you probably don't want to use Twitter as a leveraging point for Tesla, because Twitter is not making any money for Tesla. It's literally your own, benefit from that. But it would be interesting to see if at all he talked about that. So Saudi coming into the mix is also very interesting. Here's the Wall Street Journal talking a little bit about this. The talks are at a very early stage and could fall apart. Any deal could be fraught with complications given Tesla CEO Elon Musk's contentious relationship with the Saudis, as well as the kingdom's existing partnership with the company's electric vehicle rival, Lucid Group. Lucid right now is down 1% in the pre-market on this news. And that's the second thing I wanted to talk about. The Saudis put a lot of money into Lucid. Lucid is not one of those, by the way, ARM is down 4.28% now at $58 in the pre-market as well. Lucid down 0.51%. I'm going to Google real quick, how much did the Saudis invest in Lucid? I believe it's to the tune of $4 to $5 billion. It's okay. So it's $9 billion. Look at that. So the public investment fund, Google's generative AI search, by the way, is getting really good. So this thing is dope. Has invested around $9 billion in Lucid, an electric vehicle EV startup. They first invested $1.3 billion in 2018 and now own about 65% of the shares. The Lucid Group shares are currently valued at about $8.2 billion. So they put in a lot of money into Lucid, and the kind of goal was that Saudi Arabia will buy a lot of these Lucid cars, and we will be, the main buyer. So you might as well start building it here. Well, if you're making a deal with Tesla, some of the dynamics of that changes. And the dynamics of that change in a really interesting way. Saudi Arabia has been wooing Tesla with the right to purchase certain quantities of metals and minerals the company needs for its EVs from countries including the Democratic Republic of Congo. Some of the people said the Saudis approached the Congolese government in June about securing assets in the country, which supplies around 70% of the world's cobalt. One of the proposals Saudi Arabia is considering involves extending financing to commodities trading giant Trafigura. Trafigura, by the way, is a company that has a massive supply chain ecosystem partnership with Palantir for a flaming Congo cobalt and copper project, which could ultimately help supply a Tesla vehicle factory in the kingdom. So Trafigura, a commodities trading house, would be potentially in the proposal to be able to get this Tesla factory in Saudi Arabia. If successful, a deal with the Saudis could help Tesla realize its aspirations to sell 20 million vehicles by 2030, up from around 1.3 million in 2022. A lot of the Tesla mega bulls are saying that one of the larger bull cases for Tesla that people don't think about is the ability for them to sell 20 million vehicles. I'm a bit skeptical on if Tesla could actually sell 20 million vehicles by 2030. Like, that's not an easy thing to do. If anyone would do it, it would be Tesla. But if we see legacy auto, which we're about to talk about the auto worker strike in a second, because that's also something we have to discuss. There's a lot of new updates on that. If that starts to fall apart, then Tesla's kind of going to be the only game in town, quite frankly. I mean, like, obviously there's going to be other manufacturers, but in terms of really amazing EV vehicles, it's going to be Tesla. So the idea that they could put in the logistical parts in place via deals and partnerships with other countries across the world to even have the production capacity to get to that 20 million goal would be a really unique thing. I mean, in a couple months, they're going to have 6 years left to be able to 20x their production goals, which is not the easiest thing to do in the world. They hit their 5 million cars, so 5th million car just over the weekend, Tesla tweeted out, which is amazing. but that's all time, right? To do 20 million in a year is just not that easy. Lucid, which is majority owned by the Saudi Public Investment Fund, is expected to start conducting vehicle assembly on a limited scale this month at its first international plant on the kingdom's Red Sea coast as it ramps up to produce 150,000 cars annually. So Tesla's producing about a million a year. Lucid can, barely get out 150,000 cars, and much less deliver those cars, even if they make them. This would be a win for Tesla. And what I'm seeing for the Tesla bulls is just a lot of good news. You're seeing the legacy auto strikes, which we're about to transition to in a second, basically give Tesla's bargaining and negotiation power with workers that might leave GM and Ford to go to Tesla a lot more leverage. And then on top of that, you're seeing the production slowdown times in the legacy auto manufacturers and their EV vertical integration plans delay because you've got to deal with the strike. And then on top of that, over the past couple of months, we've seen every single charging station manufacturer decide that Tesla's going to have the default charging standard, and Tesla's going to be able to make a crap ton of licensing money off of that. And the final, cherry on top, which is justifying this $270 price we're seeing on Tesla, down 1% in the pre-markets, is FSD 12 potentially being fully automated on AI, and that ultimately helping Tesla realize their goals of having FSD. Not to mention Cybertruck, I believe by the end of this year should be out. That's what I've heard by the bulls. So if Cybertruck actually does hit the road by November, December, you've got that car finally getting there as well. Anthony says, is it pixelated or is it just me? Give it 1 second. I'm closing out a couple of things. The Wi-Fi is being a little stupid this morning, but you guys should be able to hear me fine. The good thing is the audio doesn't suck, but sometimes the Wi-Fi ends up just being a little weird. Give it a couple of minutes. It should get a lot better. And then we'll go on from there. Okay, so that was the Tesla news. Let's move on to the United Auto Workers strike. Yeah, it's pixelated for you guys. This is so annoying when it gets pixelated. I don't know why, because this is the good Wi-Fi. Oh, I think I know why. Hold on. I know exactly why it's pixelated. I'm kind of ashamed to admit this, but I have let's call it 7,000 tabs open that I just realized I have 7,000 tabs open. See, when you're working all weekend, which is what I was doing, I wasn't going to any parties. I wasn't hanging out with any girls. I was working all weekend. You have 7,000 tabs open, and I just closed all of those tabs. So hopefully the Wi-Fi in 2 seconds should get a lot better. Should be a lot better. Okay, so let's move on to the United Auto Workers strike. So this is a developing story that we've been covering on the Morning Open for a while now, and we got some new updates with it. First of all, I just want to address what was going on, and I think we do have an update that broke Friday night that we didn't get to talk about because Saturday and Sunday the market was not open, and it was around Joe Biden. What did Joe Biden do? Joe Biden has sided with the workers. So Joe Biden backs the auto union strike in the 40% pay hike and the 32-hour work week. So again, the United Auto Workers, the union, is asking for a 32-hour work week. The typical American work week is 40 hours, 8 hours a day for 5 days. So they're asking to reduce it by 8 hours. And they're asking for 40% more pay. The reason for this is because CEOs like GM's Mari Bala is, making $29 million a year. The United Auto Workers feel like the cost of goods have gone up, purchasing power has decreased, inflation, all that stuff. As a result of that, they want better wages, and Biden has taken their side. So the United Auto Workers in factories like GM and Ford make about $64 an hour if you count all their benefits. Tesla workers only make $45 to $50 an hour, yet they have no union. So they're making 33% less than what the legacy auto manufacturers are making. And you would ask yourself, why is that the case, right? And the reason that's the case is because Elon gave labor stock options. I had a couple people DM me over the weekend talking about how they have friends that work in the Fremont factory since 2018 that got stock options. Guess what happened when the labor picked stock over unionizing in 2018? Tesla stock has gone up 20x since then. And so this is just another reason for why legacy auto is in a tough situation, because they can't have their stock go up by 20x, right? They're not a tech company at the end of the day. Now, whether Tesla's a tech company or not, you can debate that till the roosters come to crow. I probably messed up that metaphor just now, but the point is, it is valued like a tech company. And if it's valued like a tech company, that stock is going to go up. That stock's going to get a multiple. It's going to get a PE of what I think Tesla's PE is around 48, 50 right now. And the labor that decided to go for stock versus a union has probably made a lot more money than any of the benefits that the union could give them. So Elon spent a lot of time in 2016 to 2018 making sure that Tesla workers don't unionize. Amazon has done the same thing. Jeff Bezos, I mean, if you see some of the documentaries of how they've basically internally crippled unions, they really don't want unions because of how it hurts free enterprise. And as a result of not having unions, Amazon has been able to pay for people's college education. They've been able to raise their minimum wage to $17, which is more than many states have a state-based minimum wage, which is obviously a very good thing. But that's because of the fact that they don't have to negotiate or deal with any of these types of unions that exist as well. So what's going on with the United Auto Workers strike now? Apparently, they planned a surprise attack over the weekend that none of the GM or Ford CEOs actually saw happening. And as a result of that, they've been able to kind of leverage themselves in a really unique way. So let me bring up a clip to explain some of the coverage on that. And then we're going to talk about what that means for Elon Musk and Tesla. So let's pull that up real quick. Here we go. And we're also going to be talking about why this doesn't really impact a recession. Actually, let's just pull up this clip right here. This one should give us more leverage. Let's pull this up here. Don't forget the debt that Legacy Auto has. Yeah, Heinz, that's a good point as well. Ford retaliated by laying 600 people off in Michigan. Wow. I didn't know that. Well, and look, the reason why this matters and the reason why we're covering it is because if we don't have supply of cars, the used car price index is going to go up. That's down 15% month over month, and that's 7 to 8% of CPI. The FOMC meeting is on Wednesday, and they need to look at these things carefully. If that metric goes up, CPI goes up, which ultimately is just bad for inflation.
Bring in Tim Higgins, Wall Street Journal reporter and a CNBC contributor. In his latest column, Tim says that regardless of the strike's outcome, Elon Musk has already won. And Tim, thanks for being here. That may be a little self-descriptionary, easy to understand from all of this. Elon Musk is not dealing with unions in the same way. He doesn't have any unions.
Yeah, he's not at the table, but he's definitely, his presence is kind of looming over. It gets down to the labor costs. The UAW workers at these Detroit automakers, on average, all in is about $66 an hour. That includes benefits. At Tesla, it's estimated at $45 an hour. So from day one, when they start talking about spending more, Elon wins because Tesla is cheaper to make cars over there for those electric vehicles. And it's not just cheaper, it's also they're working to cut costs even more in the future. They've already talked about slashing manufacturing costs by like 50% for the next generation vehicle. So, the UAW would probably say it's a race to the bottom, but it is a race to make electric vehicles profitable, and Tesla is doing that, whereas the likes of Ford are not.
The Biden administration is going to get involved, Tim, and I'm trying to figure that out. It's as they always calls himself the most pro-union president in the last 50 years. So how does that, when they go in to try to mediate, how does that work? You know what it reminds me of, Tim? That I remember Corzine was the governor of New Jersey, and he was negotiating with the public unions, and he was giving a speech saying, "We're going to get you a great deal." So that's the person that was trying to protect New Jersey taxpayers' dollars from from being from giving too much, too many concessions to the public unions. He was also the governor negotiating with it. So it reminds me of the same thing. What is the Biden administration? What line will they walk in this? Are they going to twist the arms of the big three?
This reminds me of real quick. I ran for student council in 5th grade, and I remember this like it was yesterday. I went up to give the speech, and I said, "I'm going to make sure we get no homework ever." That was my campaign message. And I was like, there's no way I'm going to lose, bro. I just promised these guys no homework. Like, I literally, I'm giving them what they want. I ended up losing. So I guess the 5th graders were smart enough to know that Amit's not going to have any negotiation power, any leverage with the teachers to get no homework. But that's kind of what Biden feels like, right? Is like not thinking about inflation, not thinking about monetary costs or fiscal policy, just like increase the wages, get the work week because that's what the workers want. It's not that easy to be able to get that type of a deal.
Well, it's definitely a challenging position for the president politically. A long self-described car guy, a labor pro, but the union president is frankly frustrated with the Biden administration, feeling like the Biden administration has been pushing these automakers towards the electrification of the automobile, putting money to incentivize that. and yet worried that the worker is going to lose out ultimately. There's estimates of maybe 40% less labor needed for electric vehicles. This isn't just a concern for Detroit. This is a concern for all automakers around the world. When you're talking about electric vehicles, it's just less complex motors and less complex building that's needed. So really, where do they sit in that new world order?
Hey, Phil, let's talk just a little bit about.
Okay, so obviously that matters a lot. Real quick, I know I think it just got better. I was literally about to switch the Wi-Fi. Yeah, let me switch the Wi-Fi. Guys, give it like 10 seconds. I'm going to switch the Wi-Fi real quick. I think this will fix our problems today. So I'll be paused for 10 seconds and I think it should get fixed. Okay, we're on new Wi-Fi. Arnie counting down in the chat. This new Wi-Fi should have fixed our problems. This is actually the worst Wi-Fi, but it hasn't fully fixed it's getting there. It's getting there. Yep, we're getting 2 bars. It's getting a little better. Getting a little bit better. Okay, here we go. Perfect. Wow, that actually solved it. Now, hopefully it doesn't go back to normal, but that solved it. All right, Arnie, you're hilarious. Cool. Yeah, I don't know why it's being stupid today. I do need Starlink, bro. I'm so like I have the best optimum Wi-Fi. It is better though. It is fixed. It is. I can see it on my end. It's fully fixed. Okay, here we go. So the conclusion to this United Auto Workers stuff. Right now, they have launched a surprise attack, basically enabling them to be able to ask for different things that the Ford, GM CEOs and all that stuff didn't really expect. And as a result of that, their ability to kind of, I think on Friday night, put in even more things into the negotiations that the Ford guys, the GM guys, the executive VPs didn't expect, really has put them on the offensive. So now a strike has started. There's a full-on strike, not nationwide yet. It's in a lot of different subsidiaries, a lot of different towns and municipalities across the United States. But the fact that the strike has started means that cars are starting to not be produced in the United States in various different factories. If this continues, and again, Biden has sided with the workers, which means the workers, you got to think about what that means. The workers feel like the president of the United States, the leader of the free world, has agreed to their demands, which means they feel that they have leverage. Because when the presidential administration that determines the rules and regulations, I mean, this administration gets to determine how many miles per gallon can a car make and turn that into law in terms of new production capacity for different vehicles. Like, they have a lot of power. When that backs the auto union versus the companies have their back against the wall because now the administration has taken the side of the workers, and the workers feel like they have all the leverage because the administration might come in and potentially even bolster their claims for these pay raises. So Legacy Auto is not in a good situation at all with dealing with this stuff. And I think this is a pretty big deal because if they don't come to a negotiation soon, they're screwed. Now, you may be saying, Amit, well, usually negotiations end in terms to the aisle. The other side comes to the aisle. You have an agreement of sorts, and then you come to a deal, right? I want 100 million. I want 80 million. All right, let's settle on 95 million or whatever it may be, or 90 million. The problem is the workers aren't even coming to the table. And if the workers aren't coming to the table, that means Ford, GM, Stellantis, they have sent 5 different proposals so far. None of them have met the exact needs of the auto workers union, which means, which is as a result of that, the byproduct of that is the auto workers union hasn't even shown up to talk in the room with the big legacy auto companies. So you've got a much more complex situation here than a regular negotiation. Adam here in the chat says, this is BS. Imagine telling your boss you want 30% more money and 20% less work. Look, I would tend to agree with that. Ultimately, in the context of the strike, the workers are asking for a really unique proposal. It is bolstered by the fact that we have rapid inflation. And so this is where I don't blame the workers as much. I kind of blame the Biden administration a little bit more, just in terms of enacting more inflation in terms of the United States. I think that 2021 stimulus plan, the $1,400, while I was grateful for it, I think that kind of tipped the nail over the coffin. We already were getting to inflation because we had printed like $4 trillion by then. That plan printed another $2 trillion, and that was like, all right, it's time for inflation. That ended up being worse in the long term. So theoretically, the workers have a point because inflation is rising. The problem is they're targeting the companies, and the companies, they still need to make a profit at the end of the day to have these jobs in the first place. And so it's really tough. If you look at any of the analysis here, if Ford were to comply with the workers' demands, they would lose $12 billion in profits over the next 4 years. Now, you may be thinking, oh, that's a corporation. They're going to lose a little bit of money. What is that? If they lose $12 billion in profits, they don't have a stock that is at $12 anymore, right? That stock's coming down. If that stock comes down, they have to fire employees. They have to lay off labor. So all of this comes back to making sure that shareholders feel obligated enough to buy the stock of a company because they think there's going to be growth, which means, of course, in capitalism, you have to find a fine balance between workers and unions and regulations and rights and shareholder profit maximization. But if shareholders don't feel like there's anything worth investing in, they're not going to invest in the company. And then there is no company. There's no factories. There's no jobs. There's no cars. What there is Tesla going to the fucking moon if this happens with Ford, Stellantis, and GM. And so it's just a really tough situation for them to be in right now. Arnie says, hey, fellow creators, let's unionize 30% more ads for 20% less of the views. Yeah, I mean, imagine unionizing against YouTube and be like, hey, YouTube, you owe us more money for the ads if we have less views. It's like, it doesn't work like that. It just doesn't work like that. And I think as you go older, you start to understand what the world of unions actually looks like and why some of the best companies like Tesla and Amazon don't need unions, but they're able to win still without it. And again, the reason they're able to win is because they're tech companies. And that kind of goes to the argument for why tech companies are taking over the world in terms of their ability to usher in a new lifetime for workers, employees, and customers, which is what we talked about in the last market open for why it's so important to understand how tech companies are operating. So that's the update on the United Auto Workers strike. And ultimately, we'll see where that goes from there. Sachin, thank you for being in the chat. Happy you are here. Sounds like a job for Palantir. Palantir is actually implemented in Stellantis, and they've done a pretty good job with not automating the work, but rather being a tool for the workers to be able to use. In fact, their exact words in the partnership when they announced it a couple of years ago was that we don't want workers to be replaced. We want Foundry to be a assistant to workers so that they can become more optimized on the factory floor. But if the workers, just want more money, then it's a tough deal for Stellantis at all to work with. This is why you need stock-based comp. This is actually the best argument for stock-based comp. Are you short Ford? No, I wouldn't be short Ford. It's look, eventually I think they're going to figure this out, but in the meantime, I don't think shorting Ford would be the best idea. Ford is also a beloved retail stock at the end of the day, even though it's obviously not had massive gains. So Ford right now, 1251, down 0.79% in the pre-markets. All right, let's discuss the FOMC meeting. FOMC. So we got FOMC. What time is it? 9:13. All right, so we got 17 minutes till the market open. FOMC is this week. It is going to be on Wednesday. What are we expecting? Well, Jerome Powell is going to get up on stage. There's going to be a ton of Yahoo Finance, Wall Street Journal, CNN Business, Fox News reporters listening to him. And he's going to essentially say that inflation is coming down, but inflation is not still meeting their target at 2%. That is the Fed's target. He is going to say that they are looking at the data. He is going to say they're going to make decisions based on the data. He is going to say that the data will determine how the decisions operate in terms of their paradigm and architecture for making more data-driven decisions. And every time in a Wall Street Journal, Yahoo Finance, CNN, or Fox reporter asks him a question, he will say, well, we will look to the data. That is exactly what's going to happen over the hour that I will live stream, because we're going to be staring at this guy basically say we're looking to the data, because that's just what we have to do as stock market junkies. But that's essentially what's going to happen. Now, in terms of if it's going to be a pause or a hike, I think it will obviously be a pause. 90% of analysts are saying it's going to be a pause. The reason it's not going to be a hike is because the Fed does not have enough conclusive data that would determine the necessity to make a hike in relationship to what's going to happen in November. October CPI will be incredibly interesting, because if that signals after 2 months, we're in September right now, that's going to start to go or start to come down, because we just got August CPI. We're going to have a much better understanding of where CPI is. So right now we're at 3.7. This is for August. September CPI will come in October. Let's say that gets to 3.4. And the reason I'm saying 3.4, kind of my naive guess, is because rents will come down. Oh, by the way, I have to say something about real estate based on the conversation I had yesterday with that rich real estate guy. Rents will come down and used car prices will come down, unless the auto worker strike explodes used car prices. But those two coming down is about, I think, 20% if you put it together of CPI, which means we should see a meaningful decline. Oil is going to, if oil gets to $100 a barrel, all bets are off. But right now oil is at around 90. Okay. So that's one reason why I think the Fed will see CPI come down. Then we have October CPI that comes in November before the FOMC meeting. So we get another CPI. Let's say we go from 3.4 to 3.0 or 3.1. So we're back to like 3.1 by November time. If that's the case, the Fed will have a ton more data to be able to decide if they should hike or not, versus right now where you just don't really have it just because you already raised prices or you hiked in the last FOMC meeting. As a result of that, if they do need to hike, the Fed also will be able to standardize their hikes throughout the entire year. If you analyze it, if you like chop it up by the amount of times they've hiked, by about 12.5 basis points, which is actually pretty normal for the Fed, versus if they hiked right now, it would seem, we thought the Fed was aggressive in 2022. If they hiked in September, the aggression level would be a bit ridiculous. And I think banks in particular that are having a lot of their loans basically show hundreds of billions of dollars in paper losses, and not just regional banks. Bank of America is holding hundreds of billions of dollars in paper losses. That's not healthy for the economy if that has to actually mature. I mean, there will be a massive credit event if that happens. So most people are betting on rates to eventually come down and for the banks to hold those losses because they still have a lot of time for maturity on those losses. So eventually those losses will be just paper losses, right? It's like a stock that goes back up after you were down for a long time. It's basically my account with Palantir. So if that's the case, the Fed doesn't need to be this aggressive in September, just given they don't have that much data. 99% of, or not 99, I believe it was 90% of analysts are saying that September there's going to be no rate hike. There's going to be a pause. In November, there's a 40% chance there's going to be a rate hike if the things I mentioned to get CPI down end up going down by the end of September or by the end of October. Which means if that's the case, we'll just have more data to see a little bit later. Martin Deek says, why would CPI come down if oil is up so much? Well, that's the caveat. Used car prices going down and rents going down can decrease CPI. But if oil is up dramatically, remember, oil was 5.8%. It was over 500 basis points of the reason for why CPI was so much higher this year. So you're correct. If oil prices continue to go up, there may be another reason for why CPI is not going to be that good going into October. And look, if we're looking at oil right now, which is really annoying, $93.84. Look at this shit. It's up 4% in the past 5 days. $100 a barrel, especially with the Saudis deciding to cut oil production. Look, this doesn't look good. And now, granted, I think we got to 120 at the peak in 2022. The strategic oil reserves aren't necessarily in the best situation as well in the United States. This doesn't look good. I don't think it's something to necessarily panic about because usually these things tend to normalize themselves. In the last month, we're up 11% on oil, but this is going to be a concern for CPI. And if this does not come down by, I would say, the end of October, we're going to be in a tough situation. And so definitely not expecting a rate cut anytime soon, but hopefully we still get a pause by the end of the year and by November if oil can normalize just a little bit. Now, speaking of CPI, and I think this adds a little bit more to FOMC, before we get to that, Farino says, why did the Saudis cut the oil production? I wish I had the phone number of Prince Salman or whatever his name is. I'm so bad remembering his name. Because I would ask him that same question. I'd be like, why? And he would tell me probably because he doesn't fuck with the United States. Like, that's quite frankly, I mean, you got the Saudis that just met with Putin, right? The prince and Putin met together. They just had a photo op. And then you got Putin meeting with North Koreans, Kim Jong-un. I mean, like, it's like the United States is that one part that's on an island. And then you got all agglomerating and meeting with each other, finding different ways to screw us. And one of the best ways to screw us is by cutting the oil supply. That's not good. So part of it is probably because they want to screw us a little bit. Probably another part of it is probably because they want to raise oil prices, right? They have their own economic reasons for why they want to do that. There's a lot of different reasons for why they're doing it, but at the end of the day, it doesn't help us at all. Another reason is they hate Biden. That's another reason as well. They're greedy. They hate Biden. And that's, another core reason why they're not necessarily the happiest about that. And joining me here today on the stream. Okay, so a couple points on CPI, and this relates to the FOMC meeting. Again, I met with someone who was very rich yesterday. I'm talking about 20, 30, $40 million rich, family friend, went to their house yesterday for a couple hours and talked to them about real estate. Now, what was so interesting about this conversation, this is one of those conversations like you're just so plugged into him. And like I was listening to every word he was talking about. His argument around housing was really incredible. So I was obviously asking him about what he thinks about inflation and interest rates and all this stuff. He buys homes. Like he buys $2 million homes, flips them for $3 million. He'll buy $100,000 home, flip it for like he just buys home. Like his entire basement is just an operation of how many homes they could buy in a day, right? All day they're on Zillow scouting deals because they've gotten to such a point of wealth where the only thing that makes sense for them to do is scout more deals. A couple insights he said that I think all of you would appreciate. Number one, he said he cannot understand where people are getting the money to buy these houses. So right now he's saying, I will list a property in a neighborhood that values a property, say $850,000. I will list it for $1.35 million. I will get a phone call from the potential buyer cursing me out for listing a property for $400,000 to $500,000 above ASP, average selling price. I said ASP because I wanted to sound cool saying the acronym, but you get my point, average selling price. And so, right. And then he'll get a phone call from someone saying like, this is 500,000 above the ASP. Like, what the hell are you doing? But like, they'll literally curse him out. And then at the end of the call, he'll be like, so you want to buy? And they'll be like, yeah, we want to buy. And so what he was talking about is like buyers are frustrated at the rising prices, but they're buying the houses. I mean, he says he does not even have the ability to have enough demand from his contractors to construct more houses. And a lot of times when they buy a property, they tear it down and they reconstruct it. And as soon as he said that, what it triggered to me was remembering that Warren Buffett, I'm forgetting the tickers, but Warren Buffett, when they disclosed their 13G back in July, he disclosed a stake in 3 companies. Again, I'm forgetting the ticker. I'll probably find it up and try to put it in the comments. Those 3 tickers all specialize in home construction building. And so as soon as he said that, I was like, holy crap. This Buffett guy is no joke, right? Well, like when Buffett started investing in these home construction companies on Finance Junkies, we were like, interesting. So we know there's a housing supply problem in the context of interest rates are too high. New people don't want to sell their houses because then they have to pay an 8% mortgage, and people don't want to buy houses because there's an 8% mortgage in terms of interest rates. So like there's this weird issue going on right now. His argument was that because interest rates are so high, the supply of houses has gone down so expeditiously that he can't find enough construction, enough like literal wood. Like they can't order enough wood from, forget Lowe's and Home Depot. They're outsourcing this shit from China. They can't order enough wood from China to build their houses because there is that much demand in the real estate market. Now, what happens when there's that much demand for supply? Obviously, prices have to go up. So even though the prices don't make any sense, right? A $1.35 million home in an $800,000 area, his argument was people are buying it. And so there's just a shit ton of demand in terms of being able to, for people to be able to buy. Arnie says, is Blackstone scraping up all the supply? You know, that's a really interesting thing. I know they were doing that around 2019. I don't know if that's happening right now. He had a couple of theses for why that's happening. 7 minutes, we'll end it on this and then we'll get into the market open. So his theses for why people have all this money to buy the houses. Number one, he said in 2020, the tech workers started working 5 jobs. So this is an Indian guy. He didn't make his money through IT. He made his money through hard work and multiple different businesses. He started from the ground up, but he has a lot of friends in IT. He says these people were working at Facebook. They were working at Google. They were working at Microsoft. They were outsourcing their labor to India to do the jobs they had contracted in Microsoft. And people that were making $200,000 a year started making $800,000 a year because they just started getting smart about how to work from home. So one of his arguments were all these IT people just got so much money during COVID because they figured out how to work from home for like 5 different tech companies. And if you look up these articles, I mean, this story was happening a lot. Some people got fired for this from Facebook and Google back in 2021. But this is one thing for how people got money. A second argument he said is that when people decided to work from home in 2020, everyone wanted a bigger house because people wanted a bigger house because they needed an office. And so as a result of that, a ton of people that are working these these white collar jobs that are giving them all this money, they decided, let's just buy a bigger house to be able to have more inventory. And as a result of that, it's just driven prices up so high and driven up demand so high. What he doesn't understand is outside of the tech workers, where is the money coming from? Because to his knowledge, the market collapsed in 2020. A lot of people lost their jobs. The government had to print a ton of stimulus money. The market's kind of coming back to normal, but interest rates are dramatically higher. Inflation has gone up. So his argument is for the rest of the world that's buying up houses like it's nothing. Where is the money coming from? And he said, that is the question I've been asking myself for the past 3 years because I haven't been able to understand that. What's also really interesting about this, and I think you guys will appreciate this guy is worth a lot of money. Okay. In 2020, everyone told him, all of his advisors, to sell every house he had. I think he had 30 or 40 properties at the time. They said to sell the houses. March 2020, COVID's happening. The market's going to collapse, blah, 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 real estate, blah, 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 sell every house. And he never listened to people throughout his entire life. This is the one time he decided to listen. And he sold off 30, 40 properties at a loss in 2020 because he felt interest rates were going to go higher, the world was going to collapse, and no one would buy houses. Houses have gone up 20% almost on average in the past couple of years since then. And in 2021, when he realized a house he bought for 500, sold for 450, is now worth 675 in 2021, he went back into the market. And so in 2021, all those houses they sold, they took their losses, they took their capital, and they rebought those houses. And now those houses are worth even more than what they bought them for back before COVID happened. It was just an incredible story of understanding kind of where the market was going. And it was, to me, an argument around being contrarian, right? Because it's like the one time people are like, yo, this is the worst pandemic in history. You need to sell your houses. Like there's no way you're going to be able to get this onto the market. And he sells all his houses. Now real estate goes up dramatically. And as a result of that, he felt really bad in 2021 because he was like, I just sold all my properties, but all my properties are up 15%. Why did I sell all my properties? So he went back in and now he's making a killing because he was able to buy them. So the reason I bring this up in the context of the FOMC is housing is a major determinant of the CPI and of inflation writ large. And until housing prices come down, housing and rent, we are not going to see CPI come down. The biggest thing he told me yesterday is that demand for houses is through the roof. For some reason, people are buying up like on Zillow, you list a house, 2 seconds later, there are 50 people lined up ready to go to the open house on Sunday. They've already registered because they're ready to buy the house. And he can't make sense of that phenomenon. But the fact that that's happening is forcing him to do a ton more construction, but there's not even enough demand for the parts, the raw materials to build new houses, which means we've got a housing issue in terms of supply. If we can increase that supply, which means some of these real estate construction companies might be interesting to look at in terms of their stock prices, and I want to dive deeper into them, that is going to help decrease the CPI. But until that supply problem gets solved, we're going to have a tough issue with CPI and housing to come down, especially with new housing to start hitting the market. And until we have new housing hit the market, these prices are still going to be ridiculous. Like my parents' house is worth $250,000 more than we paid for it back in December of 2020. But we're not going to sell it because we don't want to move to another house and pay a 7% mortgage, right? Or like even forget the mortgage, even buy a more expensive house. So it's a very interesting situation going on right now in real estate and a lot of these housing prices. All right, we've got about 2 minutes until the market open. Let's get into that and see what we got going from there. Arnie says, what would you do in the situation of this guy? Would you sell now? He's not selling. He's just constructing more houses because in his opinion, if real estate's only getting more valuable and valuable, unless there is a credit tightening event happening where there's major delinquencies, real estate's only going to go up. So in his opinion, he was just like, I will continue to buy real estate because if I can't get a good deal because I have 17 people competing with me for a house, that means this is the time to buy, right? Like there is a shit ton of demand for these houses. So I'm going to keep buying houses and kind of see what goes on from there. It was just really interesting having that meeting, bro. This guy's worth a lot of money, and it was just cool. He was just so open. I was so grateful to just hear from him and get his thoughts on everything. So it was a really interesting conversation. But rates don't go down until CPI does. That's correct. Until CPI goes down, we are not going to get small rates. Look at this comment by Tide. The supply already exists. It's called Airbnb. Yeah, that's the reason. So if you own Airbnb stock, that's your hedge against the housing market collapse. Goodness gracious. All right, we got 30 seconds until the market open. We're going to see what happens with ARM. We're going to see what happens with Palantir. Palantir right now at 15.20 in the pre-markets. We had a green week last week. So we'll see kind of where it ends off this week and see if we get any major moves left and right. And then we got to talk about bond yields that are up a decent amount this morning and kind of the scare they gave to the computers given how much they were up last night. 9:30 a.m. September 18, 2023. Thank you all so much from the bottom of my heart being here on the Market Open stream with me. The stock market is once again open. Wake your ass up. The stock market is open. ARM is down 4.2%, $58.21. If you got allocation at $51 during the IPO, you made some money. You're still up. If not, you may be down a little bit if you bought at 65. ARM right now down 4%. Tesla down 1.9% at $269. Ford, Legacy Auto down about 0.87%. Let's check on GM. GM is down about 0.21%. Roblox, $27 down 0.93%. ARC Innovation, $42.77. ARC has actually been holding up pretty well. over the past couple of weeks, especially with Ginkgo Bioworks doing really well. ARK bought like 10 million shares in August, and it did well in September. So ARK at 42.75, not doing too bad. Palantir at 15.26, down 0.33%. Google at $138. Google again at its 52-week high. Bill Ackman, I put this on Twitter yesterday, has disclosed a 4.5% stake in, or 4.1% stake in Google. They've been acquiring Google over the past couple of months. I was reading a shareholder yesterday letter for why they're acquiring Google, and they really believe Google is the best big tech cap opportunity out there. So I think it reasons to look a little bit more into Google, but that is the only big tech, mega cap tech stock that Bill Ackman owns. $10.64 for Robinhood, down 0.33%. Airbnb at $141. AMC at $8.25. Starbucks, 96 bucks. Howard Schultz obviously left the board of directors last week. Not too bad on the stock. NASDAQ 13,682 opens up at $22 down. DNA 180. SLG at 40 bucks. SLG still holding on to 40. Not bad at all. Again, it was 19 back in March. So a nice double with a dividend coming on SLG. S&P 500, 443. So last week we hit 450. Now we're back down to 443. I have said since September, I expect us to have a 10% correction going to 420. I want to say I still expect that, but the only reason I expect that is because oil is going up. My broader understanding of earnings over the past couple of weeks has been that companies are going to do well. The consumer is okay. Inflation's going up, but it's not going up that dramatically. And there's enough factors to look towards the future to say inflation is going down, which means a 10% correction from here, which would be about 418, 415 on the S&P 500. It's possible. I mean, if September shits the bed, it's very possible, and September is known to shit the bed, but I don't know if that's going to happen. There's also some historical data that suggests that when August ends the month up about 1% or 2%, September ends up doing better, and that only happens like a couple times throughout the history of the stock market. It happened in 2023. So I don't know if we get that 10% correction, but if we do, I wouldn't be surprised. If we do, I do believe the $5.5 trillion that's on the sidelines in money market funds will finally come out and play with the big boys, because the stock market will be a little bit more cheaper. SoFi, $9.05, continuing to maintain its momentum above $9. Truist, $28.56, down 1.5%. UiPath, 17 bucks. Intel, $37. Roku, 75. Enphase, $118. Goodness gracious, this company has just not been able to catch a break at all. Enphase now down pretty badly on the day. Look, I think we're definitely in a little bit of a rocky path right now. It's a pretty red market right now, and Palantir up just a little bit. That was a nice little spike on Palantir. Green candle, 1538. The reason we're red, and let me go to this right here. The reason I believe we are red right now is because of yields. So last night, yields went up like, I don't know the exact number, but I think it was like 300 or 400 basis points. Okay. So we see the 10-year treasury up 0.025% on the day. Last night, when the futures opened, I think this 4.3 was at like 4.9, some ridiculous number on the 10-year. That's not good, right? Because when bond yields goes up, that means that it's better to buy US debt versus buy stocks, which you don't want to happen, because you shouldn't want to be buying debt. You should be wanting to buy innovative companies, right? So when yields go up, stocks tend to go down. And last night, apparently there was a error in the computer for how the bond rates went up. It was like a clerical error. It wasn't supposed to happen. And the Fed came out and said, look, the SEC came out and said, look, this was an error. This wasn't supposed to happen. That triggered a lot of people to feel that this is a real thing that's going on right now. And like, maybe it wasn't. Like, the conspiracy theory was the Fed stepped in and did something to stop those yields from rising that high. Because make no mistake about it, if this thing was at 4.9 on the 10-year right now, we would see stocks down like 5 or 10%. I mean, like, this would not be good right now. The 2-year bond is also, it's above 5% this morning. Obviously, the 2-year hitting 5 is not the worst thing in the world. The 10-year hitting 5 is pretty bad. So you can see, just looking at a little bit of a max chart here. Back in 2021, the 2-year was giving you 0.29% on your money. Since 2021, that has gone up 5x, a little bit more than 5x, 5.0858%. So in a matter of 2 years, the US 2-year bond was one of the best investments you could have had. It's just pretty insane that has been able to go up that dramatically. And the reason that it's been able to go up that dramatically is because of inflation continuing to rise higher. And so make no mistake about it, that's why this auto worker strike is very important. That's why student loan payments are very important. That's why the macro is important. If this stuff doesn't go down, if we don't see real declines in CPI, we have another type of Volcker situation where they saw inflation coming down and then that shit spiked back up to 20%. And then Volcker had to come in and punch it and knock it out of the park, which had to gut the economy. And we really don't want to see that happening at the end of the day. Let me fix my camera real quick. Some of the comments here. It sounds like a major bubble emit. If it sounds too good to be true, it is. Also, Buffett is imperfect, especially in the last 10 years. If you're talking about real estate, yeah, look, honestly, Smitty, I agree with you, even though my opinion on this is probably not as well calculated as it could be because I'm not a real estate expert. But if you go to Zillow and just look at the prices, you would feel like we're in a housing bubble. But people are paying for it. And so the question is, where are people getting the money from? And if you can't figure out where the people are getting the money from, that's where you feel like, is this a bubble? Are they taking out these ridiculous loans to buy these houses? Like, how are people affording these houses? So I would argue it does feel like a bubble, but I don't think it's a bubble because I'm not the smartest in real estate, but it definitely feels like a bubble just looking at some of these prices. Jan, Finance Junkie Sunday. Yeah, we missed Sunday. We were with our families, so Finance Junkies will be back tonight. I put out a community post on the channel for why we could not make it. Let's get an update on the other strike that's not as important, in my opinion, sorry to say that, as the auto worker strike. These are the creative people on strike. Obviously, this still affects all the Netflix, Disney stocks in terms of what's going on. But I actually think we see more deflation if AI ends up making the content versus, deflation if auto workers don't work. So let's get an update on them and see what they are planning to do going forward.
Change of plans. The Drew Barrymore show has decided to reverse its decision to resume airing during the Hollywood writers' strike. The change coming just now as talks between the two sides are set to resume. Joining us right now is Matt Bellany, Puck founding partner. He's been in the midst of reporting very, very closely on where these talks stand. There should be a meeting later this week. Matt, let's talk about that, but let's also talk about what you have in the newsletter this week, which is this idea that Drew Barrymore, but really the power of social media has helped the writers and the writers' union.
Absolutely. And that's been a big differentiator in this strike versus one that happened 15 years ago, pre-social media, is that the writers have really galvanized each other and the public in many ways on their side. And it was a big factor in this Drew Barrymore decision because she got absolutely destroyed online when she announced that she was going back, even though there's no agreement.
And so how do you think about the Drew Barrymore piece of it? And we were talking about Bill Maher a little bit earlier and his decision to come back.
Yeah, Bill Maher sort of kind of hovers above all this because his brand is sort of the anti-establishment. And I think he sort of likes the fact that everyone in Hollywood is angry at him and they're.
For those that don't know, Bill Maher, he has a show called Real Time with Bill Maher. I'm sure a lot of you guys know him. He's deciding to step out of the strike and start a show again. And, Bill Maher is a kind of no BS type of guy. So it makes sense why he's doing this against the workers' intent. But at the end of the day, it is definitely a blow for a lot of these workers or for these strikers.
Maybe picketers outside his show, but that's not Drew Barrymore's brand at all. She is sort of the nice friend next door. And that's how she gets guests on her show. That's why people watch her show. And all of a sudden she became a villain of the strike, even though she, according to what she had said, she's able to go back per the rules, but she does have WGA writers on her show typically. She said she wouldn't use writing, but it wasn't enough in this climate. And when the social media mob comes after you like that, it's really hard to put up a fight.
Right.
I think what's going to end up happening is they reach a deal. The problem is they will have to reach a sophisticated deal around how to leverage AI with content creation. And I don't think the strike Hollywood actors understand how meaningful AI is going to be or how well the companies could implement it. And as a result of that, it's going to be a tough negotiation, just like the auto workers, on how can we make sure we leverage AI, but don't ruin our jobs. And I don't think there's an easy answer to that, quite frankly. If I'm a Hollywood studio executive, I really am pulling for making sure that AI is a pivotal part of the future of content creation. Because if I can save 90% on writing stuff, because ChatGPT or a fully trained LLM that is better than fucking Martin Scorsese can write something, I'm not going to pay the next Martin Scorsese. Like, from a business perspective, I'm just not doing that, right? I've actually noticed that with content creation, bro. Like, I used to leverage some people to be able to make short clips and videos. There are AI tools you can pay $20 a month that you can plug in your YouTube video, and it will turn it into 50 TikToks. I mean, it's just insane the level of innovation going on with AI and how deflationary this stuff is. And so I'm a content creator. I'm not going to pay someone to make my clips. If this AI thing for $20 a month can make the clips in like literally 1/1000th of the time, like we're talking about in 12 minutes, I get 5 clips. Like, this is insane. I sympathize with the Netflix execs. I'm sorry, I do, even though I am a content creator, because at the end of the day, it's just a different world that we're having when it comes to content. Let's get into some breaking news, ladies and gentlemen. We have an IPO that is officially deciding to come to the market. So this is a company I never heard of. So we're both going to learn about them live. Klaviyo. Let me know in the chat. Have you heard of Klaviyo? Klaviyo raises IPO price range aiming for $9 billion valuation. So before we get into it, the reason this is happening is because ARM has IPO'd successfully. Instacart is aiming to IPO. We did a lot of due diligence on Instacart on the last morning open. It's in the chapters if you want to check it out, but we'll talk more about it later. So it seems like other companies are now opening up to go IPO. Klaviyo is targeting a fully diluted valuation of up to $9 billion in its initial public offering. The marketing automation company estimated in the IPO 27 to 29 bucks. So they're raising it from 25 to 27. That's because ARM went really well. So they're raising the price. Klaviyo's IPO comes after a years long stretch of very few significant IPOs that happened. Okay, so what are these guys? Klaviyo. Let's go to their website. Let's try to understand if this company is even worth going public, just from how we see it as we log in. So here's Klaviyo. Power smarter digital relationships. Our intelligent marketing automation platform turns customer data into faster growth. So it's a marketing automation platform that allows you to leverage proprietary customer data to be able to do email marketing, SMS marketing, mobile push marketing, reviews onto your websites, gives you customer insights onto your data. This looks like it's primarily for e-commerce websites in particular that are able to leverage this type of stuff, and allows you to guide your marketing with, of course, AI, predictive analytics, and benchmarks. Okay, so $9 billion for this. Let's take a look at their S1. Let's see. Maybe this is the next biggest opportunity that we can get into, and that's worth buying. Okay, so quick numbers. $585 million for the 12 months ended June 30th. So they're raising a $9 billion price at $585. So if we just do some quick math there, that is a 9 divided by 0.585. That's about a 10 times price to sales, a little bit less than that on that. Revenue growth of 56.5%. That's very interesting. Customers of 50,000, annualized net recurring revenue of 1,458. Total customers 130,000. Net dollar retention 119%. GAAP net lost 9.5 million. That's not, I mean, look, we got to dive deeper into that, but revenue growth of above 50%. Revenue of a little bit over $500 million. So, 8 to 10 times price of sales, a little bit pricey. GAAP net loss of 9.5 million, which means you could argue they're going to be GAAP profitable in a few quarters. I mean, 9.5 million is nothing, right? It's not like it's 90 million. And net dollar retention is not that bad at all. This is their growth, of course, line going up and to the right. Let's see if we can get any interesting numbers from here. Marketing e-commerce platform. Let me Command F revenue. Let's see that revenue. We're probably not going to. You know what's really interesting? What I probably should look for? I probably should look for their previous valuations, their venture runs. That'll actually give you a better understanding of this. This sounds like cockroach ants that Carp talks about. If this stuff is 9 billion, Palantir should be worth at least 50 billion. Oh my goodness, that's such a good point. Like, I know they operate in a different sector, but $585 million of revenue is cool. $9 billion valuation just to leverage AI. I mean, one could argue, could Palantir leverage some of the stuff that this company is doing via Foundry in a different way? One of the things I haven't seen Palantir do, and maybe I'm naive to this, and I'm going to check on this previous valuation, is like analytics for like in e-commerce. Like Kylie Jenner's makeup brand probably has millions of different analytics that they can look at because they have so many people buying stuff, or even Nike. That's a better example. Could Foundry launch Foundry analytics for e-commerce websites? Could that be like a $20,000 a month product that is like super optimized by Palantir and integrated into your company? I've always thought of Foundry being an analytics play for SMBs. I think all of us have thought of that. Obviously, maybe Palantir is just not that interested in stuff like that, but that might be something that maybe looking forward to that, to maybe looking more into in terms of how Foundry could keep going. Okay, so here's the press release. So in 2020, they raised $200 million in a Series C. And they raised $358 million up to date in 2020. What was the valuation? Arnie has it here. Okay, so Arnie says May 2021, $320 million raised, 9.15 billion. November 2020 Series C, 3.9. Okay, so their last valuation was 9 billion, essentially May 2020. So if you invested in May 2021 in Klaviyo, you are not making any money on the IPO. In fact, you're losing money on the IPO. So if you were a Series D investor in Klaviyo in 2021, it's now going IPO. You're not making any money, which is very tough for a venture capitalist because 2 years later, you don't end up making any money. There was a great chart I want to show on Instacart, and we'll end it off talking a little bit more about Instacart. They're raising their IPO price as well. On the different investors that made money off Instacart. I mean, this was pretty phenomenal seeing this picture in terms of which investors made money and which investors didn't make money for those that investing. So let me share my screen right here. This just goes to show you how incredibly difficult it is to actually invest correctly in startups, and also how the market corrected pretty badly. So as you can see, Y Combinator invested at Instacart's seed round for 24 cents a share. So they bought their shares at 24 cents a share. They're going to be selling them at about $28 a share. So they're going to make a pretty decent return, but they only invested, I think, like 7 million. They didn't really invest a hardcore amount, which means they're not making a ton of money from there. Sequoia invested in not 7 million. They invested like 500,000. They're going to be making 7 million off like, I think 150 to 500,000. So Sequoia ended up investing in the Series A at $6 million at 24 cents. Andreessen Horowitz came in, Kleiner Perkins came in. If you invested before 2018 or before, you're making money. 24 cents to $20. If you invested in 2018 Series F and beyond, you're losing a crap ton of money. I mean, look at this. Sequoia, A16Z, and Fidelity in 2021, they invested at $125. It's IPOing at 27. They're going to have to write off a couple $1 billion of losses on this IPO that's going public. I mean, like this is a tough market to be IPOing in, but some investors will make money, some investors will not make money. If this was 2021 and they went public, they would probably be at like $200 a share or something. But now it's just a different market and the world has changed. So I think because the Instacart IPO is happening, and because we saw ARM go public as well, and we'll go back to the charts in a second, that's why we're seeing companies like Klaviyo decide to go public and see what they're doing as well. As Arnie says in the chat, smart money is not always the best at investing. A lot of times people make mistakes. I mean, just going to Bill Ackman again, the dude went heavy in Netflix, went down to 160. If he just doubled down, he would have, I think, tripled or at least 2.5x his money over the course of a year and a half. He ended up taking a $400 million loss. Not everyone is smart. At the end of the day, if you make a bad decision, just remember some of the biggest investors in the world aren't making the best decisions at all. Johnny Max says, Amit, today is my good friend's birthday. Think you could give her a shout out. She's a big fan of you. Shout out to E. Norma Stitz. I hate you, Johnny, so much. I really, this is the second time I fell for that. Last time it was something to do with D's nuts or whatever, but shout out to enormous Stitz. That's, I try to be a nice guy. I really try to be a nice guy because I'm so fucking grateful that you guys join every morning. And when someone says like, hey, I have a friend, they watch you, they're a fan of you. First of all, I'm humbled beyond imagination that people are quote unquote fans of my content, right? So it really means a lot to me. So by the way, Tesla down 3%. For me, to give a shout out is the least I can do. And the way you guys corrupt these types of feel good moments by bringing in enormous tits. Like as soon as I started saying it, I felt like this was going to be bad. But I was like, oh, her name is E. Norma. Like that's a very country name from Oklahoma or something, I guess. But you guys just take advantage of me. You take so much advantage. You made the chat laugh, which is really good. But Amit, we love you. No, I'm just kidding. This is funny. These are funny jokes. Last time I did it with D's nuts, and I did it with Huge Ass. The guy's like, my friend's name is Huge Ass. HUGHJASS. I was like, oh, happy birthday, Huge Ass. And then I didn't even notice it. 2 minutes later, everyone started laughing in the chat. I was like, why are you guys laughing so much? What's so funny? I'm talking about fucking Tesla. And I was like, oh, it was Huge Ass. Anyway, a company that is not showing off their enormous tits right now is Palantir, $15.26, down 0.49%. Where's ARM? Is ARM still dropping or are people buying the dip? Wow. ARM, $56.82, down 6%. I had someone message me on Twitter saying, oh my God, Robinhood only allocated 14 shares for my ARM IPO. I'm so annoyed. I have to buy the rest at 64. And I was like, dude, why did you buy it at 64? He was like, well, I was just like, dude, like, no, like, it's just, this is one of those companies we know is going to come back down to normal, if not below 51. So there are people who bought that ARM IPO high. I mean, there are people that are definitely back holding this right now. It seems like people are selling and taking some profits, which they should. I mean, the company went up 35% in like 15 minutes. You should be taking some profits. Down 6% on the day. Palantir's a little bit green. Google at 139, closely getting to 40 or 140 in about 50 cents if it can get there. NASDAQ 13,712. Apple at 177. Apple recovering a little bit. Oh, I forgot to mention. How did I forget to mention this? I'm getting the iPhone 15. It's happening. I'm getting the iPhone 15. Now, the reason I'm getting the iPhone 15 is because I called up Verizon on Saturday just to see what deals they had. I was like, you know what? I just want to see what deals. And initially I was like, hey, can I trade in my iPhone 12 for an iPhone 14? What deal do you got? He was like, oh, I can only give you $200 off. I was like, it's the previous generation. You can't give me a better deal than $200 off on an iPhone 14 that's not going to even be as good as the iPhone 15. And he said, yeah, that's all I can do. However, I can give you $830 off on the new iPhone. And as soon as he said that, I was like, wait, what? I was like, you're going to give me $830? He's like, yeah, it'll be $370. I was like, yeah, let's do it. I was like, upgrade me, my mom, my sister, my dad, my uncle. I upgraded the whole family onto titanium iPhone Pro Max 15s that's going to be coming out by October 6th. I don't even have to wait in line for them, bro. I'm guaranteed getting this bad boy October 16th. So if anyone has Verizon or AT&T, they're doing this deal where you get $830 for, depending on your model, to get an iPhone 15 Pro. And look, I'm not going to lie. I haven't got an iPhone in a long time. I don't get excited for material things. You guys know me. I have my typical, I'm never going to fly first class no matter how rich I get in life, because I kind of believe in this idea of like being humble. I'm pretty excited about this iPhone 15. I know I was shitting on it last week saying, oh, Apple didn't introduce anything. It's not that serious. But look, man, that A17 chip, I don't know. That looks exciting to me. A17 chip looks like this is going to be really fast. Any websites I need to load that have videos that play that I want to watch in a meaningful way, they will load very, very quickly and on a beautiful display, 6.7 inches, fast load times. So it's going to be really exciting to have this new phone to watch videos that I want to watch in full HD on something that just doesn't slow down. Videos that I want to watch full HD. It's going to be really fun to see how this thing works. So it'll be cool to see that. Now, based on that, what does that mean for Apple stock? Okay, so Dan Ives' Twitter is being stupid because it's not showing his tweets. However, he tweeted over the weekend that they are seeing, based on the people that they're talking to, 10 to 12% more demand for the iPhone 15 from upgrades. Now, I got to give credit to Dan Ives. He said a couple weeks ago that upgrades are going to be a massive cycle for Apple. They're going to have 85 million people upgrading because it's been 4 years since they've last upgraded. And that's what gives him the $240 price target that he's considering for Apple. Look, I upgraded my family, 6 people in 5 seconds as soon as I heard that deal. I think it's a no-brainer if you have an iPhone 13 or below, much less an iPhone 12 or below, even an iPhone 14, if you can get the same $800, why wouldn't you upgrade? It's $300 and it's financed over 36 months, $10 a month. For $10 a month, I can enjoy a brand new phone that's going to allow me to watch videos in HD quality because its A17 chip is going to, go very fast. So, I think it's a good idea. Twitter is down. Is Twitter down for people? Did Elon not pay the server bills? What's going on? Is Twitter down? Oh, wow. Twitter's down. Twitter's down for people. Twitter's not loading for some. Look at that. I have no more tweets on my profile. Wow. Oh, by the way, we have some breaking news. So this one tweet that did load, I'm not going to be able to show it on this computer because Twitter's not loading, but ended up loading here. Chad tweeted this 9:47 a.m. So this was about 7 minutes ago. This broke. Wedbush reaffirms positive outlook on Palantir Technologies and sets their price target. On September 18, 2023, Dan Ives reaffirmed his positive outlook and a $25 price target on Palantir. This suggests a potential increase of about 54.8%. And here's an article reaffirming the case. The article, I'm gonna have to go through the article, but basically they're saying, yeah, and the reason they're coming out with this is because of AIPCon. So most likely AIPCon is was enough for their intentions. It'll be interesting to see Bank of America and Morgan Stanley if they come out with any reports on AIPCon, because given it just happened, there should be some either reevaluation or further understanding of their thesis from the bigger banks that cover the company on what they thought of the event, and if that means that people will be able to think Palantir has a better chance of going higher. So we'll see what happens. Okay, let's take one last look at the charts before we end off today's market open. Again, thank you all so much for being here. We start at 8:45 every day. I am loving it. 8:45 every day. It is awesome getting to talk. I feel like I don't even have enough time to talk about all the stories I want to talk about. It is super fun, and I am super, super grateful that everyone joins me in the morning to be able to discuss the stock market. It's just the most fun thing in the world, and I really enjoy it. ARM is down about 5%. General Motors down about 1.65%. Tesla down about 2.8%. Again, breaking news this morning was Saudi Arabia and Turkey are looking to have a factory open up in their countries for Tesla. Arc Innovation down about 1.4. Palantir up about 0.4. Google up about 0.7. Robinhood down about 0.05. Let's check PayPal as well. We didn't check that, and then we'll end it off with the S&P 500. PayPal down to $63. It was at 65 on Friday, and we'll check the S&P 442.95. All right, not bad. It's a red day, not super red. Some stocks down a little bit more than others, but overall, not the most red in the world. All right, a couple of videos coming out today. One of those videos will be on Palantir talking about CPKC, analyzing their AIP presentation, and also Bill Ackman apparently owns 0.4% of his $16 billion portfolio in a company that presented at Palantir's AIPCon. I think a lot of people missed that. I found that out over the weekend, so I'm going to be analyzing that in a video coming up. And then we'll have Finance Junkies at 7 p.m. as usual, and we'll go from there. MNOP got up late this morning, but I enjoyed this the news start time as well. Thank you, MNOP, for being here. Thank you all for joining. I hope you have a great Monday. Let's kill it. Another day on planet Earth. And of course, I forgot the word of the day. Let me do that. No one reminds me. It seems like you guys are forgetting the word of the day as well. We got to make sure we don't forget that. Word of the day. What do we have? What do we have? Word of the day. Oh my goodness. I can't make this up, bro. You guys think I make up these words of the day? I don't know what this website figures out how to get these words, but here we go. Eggcorn.
Eggcorn.
What the fuck is this? Yo, I swear, none of you in the chat have ever heard of this word. I promise you, you've never heard of eggcorn. A word or phrase that is seemingly logical alteration of another word or phrase that sounds similar and has been misheard or misinterpreted. I don't even know what the hell that means. Let me read that again. A word or phrase. Okay, so it's a word or phrase that is seemingly logical. That is a seemingly logical alteration. That means a variation of another word or phrase. Okay, that sounds similar and has been misheard or misinterpreted. Okay, we need an example on this. After watching the movie, she couldn't help but laugh at the eggcorns he made when trying to quote famous lines. Oh, I get it now. As a linguistics enthusiast, he found joy in discovering eggcorns that had permeated everyday language, such as old wise tale instead of old wives' tale. Okay, understood. That's a hell of a word, bro. I don't think anyone's ever heard of this word. This is why you join the morning open and you stay till the end, because we get words like this. So if someone is like, instead of saying, oh, perfect. So instead of saying spigot, like I turn on the spigot, as you guys have been watching my videos, I say Palantir has to turn on the squigget in terms of AIP monetization. That is 1000% an eggcorn, because that is an alteration of a common word or phrase that is being used in a inadequate way. So I shoot out eggcorns all the time on the channel, I guess. All right. That's it. Irrespective, it would be an eggcorn. Yeah, I have a lot of eggcorns, I guess. Enormous tits was an eggcorn. I hate you guys so much, but I love you guys so much. Thank you all for being here. I'll see you guys on Finance Junkies, and we'll be back tomorrow, 8:45 a.m. When it's 8:45, if you're up, if you're a go-getter, if you're getting ready for the morning, you turn on the live stream, you get your updates for the day. Hopefully you get a little bit of humor and entertainment, and we grow together and learn more about the markets. My pledge to you is I will try to give the most objective information I can about the markets, use my communication skills to synthesize that information, and hopefully provide some entertainment every morning to get you to become more smarter about the markets and be more knowledgeable about what's going on in the world of tech, the economy, and the overall stock market. That's it for me. Thank you, everybody. I appreciate you guys. I will see you tomorrow, 8:45 a.m. Bye, everyone. Have a great Monday.